I really admire what is being done, and I want to be a part of it, and I think our investors should be a part of it.
I want to ask you about the best way to actually invest in China. What we see is that most of the portfolio flows go to either the private equity markets or the public equity markets. And that's a little counter to how you've sort of, your framework of how you invest across time and throughout the world. How would you think about best approaching the Chinese markets as a new investor?
Well, I wouldn't think of it as being any different than in any other place. The public markets and the liquid markets are going to allow all the advantages that they allow, and the private markets are going to allow all the advantages that they allow. The public markets are going to provide the liquidity, the diversity, the ability to move positions around and rebalance and so on, which is very important to us. And then the private markets, let's say the venture markets, expose one to the new technologies and the energy that's happening in terms of entrepreneurship and young technologies there. And I think that's important. I think there's an awful lot of money that is chasing those venture capital investments, and then I think there's a whole lot of opportunity. I would say it's a reflection, really, of how that country has changed. Wow, from my $10 calculator days, and to see what the mind-blowing technologies are. To put that in perspective, they're now number one country in fintech, number 3 in AI and machine learning, number 2 in wearables, number 2 in virtual reality, number 2 in educational technology, number 2 in autonomous driving, and they are running fast to be number 1 in those industries. They now account for 34% of unicorns in the world, by comparison to 47% in the United States, and only 19% in the rest of the world. And in terms of, that's when they start as unicorns. If they take the share of unicorn value, it's 43% versus 45% in the United States and only 12% in the rest of the world. So if you're looking at venture, I think you've got to be there. So I think it would be important not to miss out on those. As far as the public equity situation, it's analogous. You could see the market capitalizations accelerating in the stock, bond, corporate bond markets, all of their instruments, and you could see the foreign flows coming in at an accelerating pace. You can expect those markets to be bigger than the markets that we have in anywhere in the world with time, and they will serve a similar purpose. So as far as, let's say, the legal regulatory system, it's advanced, but it hasn't advanced as much as some of the developed countries, but it is more advanced and developing at a fast rate than most of the emerging countries. And if you deal with the question of whether it's a more autocratic system, and whether you prefer a more autocratic leadership system than a democratic leadership system, you'll have to make that choice for yourself. Don't look at it as some unique place in terms of some of those impediments. Look at the whole picture. I would say that the Chinese or Confucian way of approaching things has a lot to be said for it. So you have to make your own choices.
Let's get back a little bit to some of the questions that investors have. For example, should they think of China as an emerging market investment? Should they think as a developed market investment, somewhere in between, in terms of the expected return, risk, correlation of that investment? You talked a little bit before about diversification, but what about the expected return and risk of an investment in China, and how would you structure that?
When you ask me the question of it, is it more like an emerging country or more like a developed country? So many different aspects of what defines an emerging country or a developed country's market vary. Okay, so they race down. What is the size of the market capitalization? What is the legal form? What are property rights? Just so many different dimensions. But I would make as a generalization that China is somewhere between 60 or 70% more like an emerging country, 60 or 70% more like an emerging country in those respects than it is like a fully developed country. But it has good. It doesn't have a regulatory system that is as developed as the developed countries that have been at it a while. It doesn't have some things. It has market capitalization. It has liquidity. And that's a two-edged sword. It has also greater levels of inefficiency. So the greater levels of inefficiency provide investment opportunity. So, as a generalization, I would describe it that way. If I'm looking at it instead in the question of expected returns and risks, I think, as you know, I look at each market and I look at the return relative to the risk, the expected return relative to the expected risk, and the past return relative to the expected risk and what drives it. And by and large, I find developed markets and emerging markets roughly comparable, and that being able to put together portfolios of those in an effective way is the way to engineer that portfolio. So when I look at China, I think that the expected return relative to the expected risk will be equal to or perhaps higher than elsewhere, partially because of the fact that there's the diversification that you could have and put together well, but also partially because of the greater capacity of the central banks in the central bank, I should say, in being able to ease monetary policy and also run fiscal policy to be able to have a higher ratio. I think that would be a plus.
You've traced the arc over the last 35 or so years of Chinese history and described the evolution. If you look now forward 5, 10, 15 years, what do you think the highest probability, what will we be looking at when we look at China's evolution?
We'll be looking at a very different world, and we'll be looking at a very different China, and we'll be looking at a very different United States in 5, 10, 15 years. In some ways that we will never be able today to anticipate, and in some ways that are inevitable in the kind of the same sort of way that demographics is inevitable. The following charts probably help to answer your question. They show a number of statistics, including the sizes of the economies, the relative sizes of the economies, the relative shares of world trade, the shares of the global market, equity market capitalization, the shares of the global debt market capitalization over the next number of years. These projections are based on our 10-year forecasts that look at a lot of indicators to determine what the next 10 years growth rate is going to be, likely to be. They're based on the relationships between those types of growth rates and changes in market capitalizations, and also work that's now being done to develop the market capitalizations and open those economies. They're not going to be exactly accurate, but they're going to be probably pretty much accurate. So in a nutshell, it's going to have the largest economy in the world, the most trade in the world, the most market capitalization in the world.
These are big changes.
Yeah. And the United States and Europe and Japan and emerging countries are going to have big changes too.
You're sketching out a continuation of some dramatic trends that have already taken place. Any threats that you see to that progress going forward?
Well, I mean, there are always threats. I think the threat is the threat of conflict with the United States, in whatever form that'll be. And then there are always threats. They have to do with probabilistic things. You can have threats that'll affect our countries in terms of anything from climate change issues, pandemics, political disruptions. There's that whole range that could affect any of those countries, right?
Ray, we've covered a lot. We've talked about the evolution of China, the opening of the capital markets, how to think about it from an investment point of view. I thank you for your time and perspective, and I look forward to sitting down once again and updating this in the not too distant future.
It's my pleasure. It'll always be interesting.